Good morning. I'm Peter Milios from the Finance News Network. The S&P 500 fell on Tuesday, weighed by concerns over rising Treasury yields ahead of a key speech later this week from Federal Reserve Chairman Jerome Powell, as well as declines in banking and retail shares. The S&P 500 edged 0.3% lower, while the Dow Jones Industrial Average slid 174.86 points, or 0.5%. The tech-heavy Nasdaq Composite eked out a small gain. Nvidia, which is slated to report earnings on Wednesday, ended the session down 2.9%, erasing an earlier gain. Several regional and larger banks fell after the S&P Global cut credit ratings and revised its outlook for multiple US banks on Monday, citing tough operating conditions. KeyCorp and Comerica dropped 4.1% each. Big bank JP Chase also fell 2.1%. Dick's Sporting Goods and Macy's fell by 24% and 14% respectively on cautious full-year forecasts, also leading the SPDR S&P Retail ETF lower. Dow member Nike slid more than 1% for its ninth consecutive daily loss. Wall Street has been focused on the bond market after the benchmark 10-year Treasury yield hit its highest level since 2007 this week. The 10-year yield eased slightly Tuesday to 4.33%. Moving on now. Investors are anticipating Powell's speech at the Kansas City Fed's annual economic symposium in Jackson Hole, Wyoming this Friday. Turning to commodities, there is a few things to report on. Sweden's climate minister plans to lift the uranium mining ban, aiming to double electricity production in 20 years. The majority in Parliament supports this. Notably, Sweden holds approximately 80% of the EU's uranium deposits and presently conducts incidental uranium extraction while mining other metals. And oil held a modest decline amid signs that supplies are rebounding, while concerns linger about demand in China, the world's biggest crude importer. Turning to US sectors now, real estate was the best performer overnight, whilst financials was the worst after the S&P Global cut credit ratings for multiple banks. Lastly, a key business group has weighed into the debate over the government's decision to block Qatar Airways from operating more flights into Australia, saying the move would cost the tourism industry an estimated $788 million a year. In a letter to Transport Minister Catherine King, Australian Chamber of Commerce and Industry Tourism Chair John Hart said more international flights would help operators rebuild after years of crippling COVID-19 restrictions. The SPI futures are pointing to a 0.2% fall. Thank you for listening.